Folks, Blackball Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Blackball Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast.
What's going on, guys? Brinks Trades here for another chart breakdown. This is actually going to be our first chart breakdown of 2024. So let's go ahead and get into it. There's a lot in store for this year. So we're going to go ahead and get this charts pulled up if they'll cooperate. Hope everybody had a good new year. And let's see. Okay, cool. All right. So 2024, man, it's a new year in the charts. A lot of stuff is changing, but we're still sticking with some of our same analysis, right? So if we kind of go back up to the weekly analysis, obviously, if you're not familiar with how I teach, I always start with the dollar index because it gives me a frame of reference for how we think the rest of the market is going to cooperate. Dollar is king and everything else kind of falls in line, at least for now. So this past week, we saw the price trade into this weekly imbalance here. And so we called over the past 2 weeks, we saw price trade into our fair value gap here. And we wanted to see somewhere a level of pullback. And so the most obvious level that we thought price could trade into was this secondary imbalance here, this fair value gap. Let me mark this a little bit differently. Sippy. Bam. Okay, cool. So we saw price trade into this area, and we wanted to see, price eventually, continue on with the downtrend. And so a lot of times when I do my projections, sometimes I project a little bit too far ahead. And so a move that, I think might happen in a week will actually take a couple weeks to play out. So that's kind of like where, my, I guess, maybe flaw as a trader, I guess. I project too far too soon. So again, so we want to see this continue on and reject from this bias. It just won't always happen in the same week. So it'll be a week over week bias, the long-term bias we want to see the price trade at. So again, so we saw price trade into this fair value gap here. We want to see, rejection to the downside. And so again, our overall target here is going to be this low at 99.15. That's really where we think long-term we're going to go and aim at. So we're bearish, continuing with the bearish trend on this. We didn't really shift on a market structure shift. Or any type of break of structure that will cause us to really think long-term bullish as of yet. And so we're still respecting this. So we want to see this continue to go down. And then so areas that we'll be looking for, ultimately our target here at 99 or 99.18 is kind of our target that we want to see price hit long-term. So again, just so we have our kind of like notes here. Again, I use TradingView as my notepad. I take a lot of notes on TradingView, just on price action, where I think the price is going to go, especially on the weekends when the market's dead. So I don't feel like there's an urge to kind of like enter a new position based on analysis. So this is when the markets are dead. This is kind of like my canvas time where I can come in and do stuff. So long-term, so our long-term trend or our long-term target, I guess, is a better word for it. Is this low? And so what I'll be looking for next week is a couple levels. Obviously, the low here. So I'll just say like, primary target. And so over the next week, could be 2 weeks, right? But we're, this is our short-term target right here. And then our long-term target is going to be the low at 99.18. I'd like to see, one thing I also will be noting, and I talked about this yesterday with one of my students, is consequent encroachment. So I'll be noting the level here. Boom. CE level. If you're not familiar with what that term is, there's a lot of good references online where you can look that up. Saving that stuff for my students. So we'll be looking for CE to get hit or respected. And so if we see price respect this level here, and this is at 100.63, then we'll eventually maybe we'll see a rejection and a retracement sooner. So I would want to see this level broken and not respected to continue on with this trend. So that's just the level that I have marked out for that reason. So overall, we're bearish, right? So we know that if the dollar index is bearish, we should be bullish on indices. We should be bullish, if you trade Forex, we should be bullish on Forex pairs where the US dollar is secondary, like Euro USD or GBP USD, and we should be bullish on pairs if you trade Forex that have dollar in the front is the lead pairs, like dollar CAD, dollar JPY. So let's go ahead and check out the rest of these pairs or these indexes and see where we're at and see what our targets will be. Let me go to the comment section really quickly. Acmo Billionaire said nope. I don't know why he said nope, but yeah, I mean, if you want to explain yourself, that'd be cool. So anyway, so dollar index, let's go ahead and check out NAS. So there's a couple levels that we are respecting. So when I trade Nasdaq, I use the E-mini futures. Again, if you're not familiar with how I do breakdowns, I use the E-mini futures chart. I also actively trade futures market and the Forex market. So when I'm trading the Forex version of this, I'm obviously going to break down NAS100 and use that. But E-mini futures is just a little bit cleaner. It's just a little bit more professional markets than the Forex markets. So, you're going to get more of an accurate price across all of the different brokers that offer. And, there's not as much variation or lag or, I guess the ability to play with the charts as much as there are in unregulated markets with Forex. So one thing that we called out last week is that we're trading at all-time highs on Nasdaq, right? So we're trading at all-time highs. So that means that we don't really have a target as far as liquidity goes, right? So if we're looking for liquidity, if we're looking for an area that we think price might run to, we don't necessarily have a lot of targets to get hit. So the only target that we can really trade to each week is, our previous week high. And that's because there's, we know that there's buy side resting aside it. So there's other ways to project potentially like an all-time high or like where we might be running to for an all-time high, but I'm not going to go into those. It's a little bit more complicated. So again, so if we talk about buy side liquidity, right, if our target is where the buyer's at, we want to see price run to these highs. So my target for this week will be 17,162. And so I want to see price respect a few levels. So again, I want to see price respect the midpoint of this imbalance, which we're still somewhat respecting it. So I would want to see price really make a huge attempt to stay over this level going into next week on the weekly time frame, and really retest these highs. And so let me see if we go to the daily time frame. Again, I want to see price respect these highs. So there's a couple levels that I'll be looking at. And so the one thing that when I was breaking down charts with one of my students yesterday is this is the ideal target from a weekly perspective. If we break things down to the 4-hour time frame, go to the 4-hour, I think it was. Overall, this is what would be considered potentially a breaker setup. So we had a breaker structure to the downside. So any action going above this, retracing back to these imbalances, might be seen as a setup for a sell-off move. And so because we're trading at all-time highs, because we haven't dealt with our quarterly shift beginning of the year, we should be expecting some type of quarterly shift to happen sometime during this quarter. And this market run that we've been on is pretty much the market run that we've been on since the beginning of September. We have to kind of ask ourselves, like, all the liquidity in the market is going to be positioned below the market. So there's a really great opportunity for the market to actually reverse and start going down. And so, which is one of the reasons that I only project to current highs instead of like for a higher target than this. And I'm not just blindly buying the dips in a trend. And that's one of the things that I'm staying aware of. And so with this, ideally from a weekly perspective, our target would be last week's high, but I'm going to make a note for this level right here. And make this red. I think it's that one. So I want to see. No. Should be. Oh, okay, cool. So I want to see how price respects this level here. And so if we disregard this level, ideally in the best case scenario for this setup, I want to see this area disregarded and I want to see price run through this level, right? And if that happens, then I'll continue to look to go long. But if we come over the next week or so and we really respect this zone, then I potentially will be flat. And I'm so any setup that I'm looking for this week, I'm looking to go long and I'm looking to take things to this imbalance. And I want to really see how price respects this level once we get there. So that's one of the things that I'll be looking for. And so this level is 16,733, and we were going to run to 16,932. And the reason for that is, again, we're trading at all-time highs, right? So we know that there's going to be really technically not a lot of liquidity over the market that we're going to be trying to chase. There's only really one level that we as traders can call out without seeing, like where the liquidity is specifically. So we only can really estimate that we're going to have buy side here. The second reason is that we are in a new quarter, we're in a new year, and we tend to have quarterly shifts, right? So every 3 to 6 months, there's going to be some type of quarterly shift in the market that really causes us to, shift market direction and attack the opposite liquidity. The third reason is we've had some type of break of structure here. And so I really want to see, and from an ideal perspective, from a weekly perspective, we should be continuing to go up. From a daily perspective, we might see something like this, where we hit this level and it's a deeper retrace, which will cause, like a deeper retrace on our weekly time frame chart. So there's a lot of juggling in time frames, and there's a lot of things that I'm staying aware of, especially early on in the year. And so I'm not going to project. I can't really project too much when it comes to Nasdaq, and I think we're going to see the same thing on S&P and Dow Jones. And so really, I'm still going to maintain the bullish trend for this week, but I'm really watching this zone. And once if we get to this level as a trader, I'm going to be flat, and I'm not really going to be looking to take any other positions. So really that level is going to be that 16,735 level. And then the high of that imbalance is going to be 16,926. So ideally want to see how price reacts here. So I'm going to actually shorten this up and say that our target is for this week. Going to the 4-hour time frame, again, same thing. I want to see how price really just reacts in this level. Ultimately, our weekly long-term high is what I ideally want to see this get hit. I ideally want to see this gap disregarded and just we're running straight for the highs. But again, with all those things considered, you have to kind of take everything into consideration as we're moving into a new year. So with that being said, bullish for this week on Nasdaq on E-mini futures. Let me see the comment section. Change market structure equals no uptrend. Buy red box. Michael Brown said, so I'm going to get to some of these comment sections right here. Echo Billionaire said, I didn't have a good year last year. Well, hey, hopefully you have a good year this year, man. So Michael Brown says, not so much spread with slippage of futures. That's 100% correct. They don't play around with the spread as much. That's why I love breaking down the time frames or breaking down charts on this and trading E-mini futures. I'm going to probably transition to more of a futures trader. I do still trade some of Forex, but it doesn't make sense to trade futures on a Forex platform. You might as well just go straight to the source and trade on a futures platform. So I'm in that transition. I've primarily been a Forex trader and a Forex trading on Forex platforms for like the last 10 years. So change of market structure. So Chris H says change of market structure equals no uptrend. And he also says why the red box. So Chris, what I mean here, let me see that change of market structure. Yeah, so the change of market structure is so basically if you have a change in market structure, if you think about a market structure, you have lower lows and lower highs, higher lows and higher highs and an uptrend and higher lows. And then a downtrend will be lower lows and lower highs. And so a change in market structure is when you take out a low and you form a lower low, right? So in this case scenario, we have a low that's lower than the previous low, right? And so with that being said, it's a change in market structure. So in theory, you can make the case that we could continue down on a daily time frame. Now, when you're juggling your time frames and you're managing everything, right, from on a weekly time frame, we're still very much in an uptrend. So what that signals to us is that we might potentially be setting up for a deeper retrace, right? We might be setting up for a retrace that goes deeper than just this low here. So what I'll be watching for this week on Nasdaq again is how we react when we enter this imbalance, that fair value gap, and then how price reacts with this low. If we take out this low, then we're probably going to be going for a deeper downtrend than this. And so it might not signal a complete market reversal, like where on the higher time frames we're just taking out lows and we're just transitioning, but it just might simply mean that we're going to dig a little bit deeper into this retrace that we're currently on right now before we transition. Now, if we see a weekly break of structure, a weekly shift in market structure, then that's going to be a prolonged thing. It's going to be weeks and weeks of us just, following potentially a bearish trend. So those are the things that I'm analyzing on a higher time frame. And so my whole goal here is really just to try to get a better understanding of what I think is going to happen week to week, and then trade with that bias throughout the week, right? So, ICT concepts, students, higher, low. Yeah, so OJ Vic says ICT keeps complicating very simple concepts. Yeah, so the thing about it is I wouldn't necessarily consider myself an ICT student because I have a lot of different stuff that I pull together in my trading. But I'll say that you got to tell me where the higher lows are going to be formed. And I'd say that if you don't know where those things are going to be formed at, then there's way more than just higher highs and higher lows. If you look at if you look at a market, you'll see that there's plenty of times where market structure breaks, right? And you get faked out and it goes up above the high. It looks like it's about to form. Let's say you're on an uptrend, it breaks structure and goes to a downtrend, right? And it looks like it's going to continue off the downtrend, but then it breaks right back and goes into an uptrend. So like market structure is way more than just saying higher high and higher low. That's like a very basic understanding of market structure. So like there's a lot that you have to consider outside of just a break of structure, right? So boom, you have breaks of structure. There's plenty of times where you get a break of market structure and then it'll continue right back up with that uptrend, right? And if you just look at things from like a basic person's perspective of market structure, then you're never going to anticipate the times where you might get faked out of the market. And so you wouldn't really have a great understanding of that. So way more than just saying higher, 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 low. I get what you're saying. Like it's a very basic, like idea, but it's a little bit more complicated. So we go to the E-mini S&P though. Boom, 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 boom. Actually, I'm going to go to US500 because it's not very clear. Cool. So US 500, obviously, if you're not familiar, is basically the Forex version of the E-mini S&P, or just the S&P 500. So same thing, same idea. This is not the right. This is the right one. Cool. So again, so with the US 500, still holding the bullish bias. Again, the same thing is probably going to manifest on the S&P. So there's a couple levels that I'll be looking out for. Sorry. If we go to the weekly time frame, again, ideally from a weekly perspective, this is a little different than Nasdaq. We do have a previous high that we have not hit yet, which is this level right here. So I want to see price ultimately from a weekly perspective come into this range and really just retest this area. So again, that's going to be, again, we're going to continue on with this bullish trend. And so we traded out of this imbalance here. So I want to see price really find a reason to continue on and upward with this. If we go to the daily time frame, again, we've broken structure on this time frame, right? But ideally, there's one level that I'll be looking out for, which will be this imbalance right here. And so my whole thing is that coming into this week, I want to see how price respects this level going. It's a very small imbalance. But I want to see how price respects this level going a little bit higher. So ideally, I want to see price drive back into that area. So for this week, I would like to see, best case scenario is I'd like to see us trade back into this. This is that weekly candle, so let me get rid of this. Boom. Oops. Boom. So yeah, so ideally, I'd like to see price trade back into this level at 4,747. And really the same idea kind of applies here. So we've had a break of structure. And this is, again, why it's a little bit more complicated than just saying higher high and higher low, because in theory, from this time frame's perspective, we should be looking at this to continue on with the downtrend. We broke structure. We formed a lower low in this case, right, on a downtrend. But our overall weekly time frame is telling us that price is on an uptrend. So we really have to ask ourselves, are we being faked out by this change in market structure? And we're just going to disregard this. And so having an idea of imbalances of like this is going to help us understand whether we're going to be running towards an uptrend or downtrend. So if we come to this level at 47.47 and we disregard this imbalance here, then I would most likely expect us to continue up and take out these highs, which is the projection. So from a weekly perspective, this high is at 4,794. So there's two levels, two targets. Well, from a higher time frame perspective, three targets. I'll be bullish still here. I want to see how price reacts in the zone. And then if we disregard that, which ideally, like in the best case scenario to continue on with this weekly trend, I want to see this disregarded. But if we respect this level, then I'm going to probably, I'll be flat regardless, but I wouldn't be looking to trade anything until this low is taken out. And then I'll be looking for shorting opportunities. But I think in a best case scenario and an ideal scenario, I want to see this gap, just same thing on Nasdaq. I want to see this gap disregarded and us continue on and take out these highs here and here. And so either way, I'm kind of prepared for it. You're prepared for it. But again, the reason that why you can't necessarily say like lower low or lower high, and that just, that works in theory, like it works in very basic market principles, or lower low or lower high, higher low, but it doesn't always account for the fake outs that you see. And so the question we're asking ourselves is this a fake out with broken market structure, or are we going to continue up higher? And so until we really get weekly confirmation that the trend is over, then we kind of have to run with the bullish idea. So, and again, the other markets have taken out all-time highs. We haven't necessarily taken out all-time highs on US 500. So there's the things that I'm thinking about. Market correlation between the different markets, where we at liquidity-wise versus the other markets, and so it's a little bit more complicated than a basic concept like that. So either way, so let's see. So again, I want to see how price reacts to this imbalance level right here, 47.50. And then if we take out these highs, then then we'll continue on. And so those are the levels that I have marked out. Again, if we take out this low at 4,664, then I'll be looking to go short. But gotta see that happen first. Until then, holding on to the bullish bias. So a lot of if-thens in this week, just because again we're trading at all-time highs. We're trading way over the market. We should be expecting some type of quarterly shift that happens in the month, in this first quarter. And we might not get it, but usually every 36 months you should be expecting some type of quarterly shift in the market. So if we move to US30, same thing. Same thing. The difference here is that we really haven't had a break in market structure on this. And so if you notice, this is kind of like, I'm giving a little bit more today, but this is kind of like the Kraken correlation, where if everything is trading under these lows, US 500 and Nasdaq are trading below these lows, and Dow Jones is not. That potentially is a good symbol, a sign that price wants to kind of disregard the break in structure. So another reason why I break down all these indices is that I'm looking for correlation between them, right? And so I'm looking for what's not flowing right between the markets to kind of give us an idea that one market might just be digging for liquidity and the other one is going to continue off the trend. So that's another idea or another reason that you can't just say higher high, higher low again. So with this is a little bit different. So we're really respecting this volume imbalance here. So I want to see price inevitably kind of trade up and hit the target for the high. That's ideally what I would like to see this week, and really respect this imbalance. This is our all-time high. This is pretty much just like our situation on Nasdaq, where we don't really have any liquidity to run to at this point. Again, we're trading at all-time highs. We took out the high of 2022, which was the previous all-time high, back in the beginning of December, mid-December. So we don't really have a play that we can call to. And so I would like to see best case scenario price respect this level and just run right up. Let's go to the 4-hour time frame. I don't think I see too much. Maybe broken structure and transition to a downtrend in the 4-hour. But ideally, I'd like to see price really take out these highs. So if we run to 37,789, that's kind of like the level that I'd like to see price run to. So that's pretty self-explanatory here, but ideally would like to see this respect the volume imbalance. We saw price really come in and dig and take out liquidity underneath these previous lows here. So heading towards the high is what I would like to see. So let me go to the comment section to see if anybody's got comments. So the first thing that I'm saying is, can I show why price will react? Can I ask what price reacts to the imbalance? It has, so Chris, I'm not gonna, without going too much into it, because I'd be here like for an hour explaining stuff, but price moves from liquidity point to liquidity point. So this whole market is based on the idea of liquidity, right? And so the market runs for those areas, and those areas are sensitive because there's liquidity resting in those. So if you guys want more information, free Telegram, shameless plug, free Telegram. I drop a lot of analysis in there. Doesn't cost you a dime. but it's my way of updating my analysis throughout the week. So yeah, so I already did do the DXY breakdown on that DXY. Basically, I want to see dollar index continue to go down and respect some previous levels that we called out. So I would like to see price really go down, and maintain that bearish trend that we've pretty much been on for like the last like couple months. Joseph says quarterly shift. So basically, if you look at the market, any market, right, every 3 to 6 months, there's a quarterly shift, right? So what I mean by that is we get some type of break of structure majorly on the higher time frames, on the weekly and the monthly. That has a lot to do with us chasing liquidity. That's the easiest way to put it. That the 2-second explanation. I could teach a whole hour lesson on that, but yeah. So the markets, we're just running to and from liquidity. That's your kind of like free analysis for the day. So overall, just to kind of sum things up, dollar index, I want to see price continue to go lower. Nasdaq, I want to see this continue to go higher. The S&P, I want to see this continue to run higher as well. Again, but we're making notes on dollar index and Nasdaq for those levels that we called out, those fair value gap levels that we called out here at 16,751 and what was the other one? US500 and 4,745. So those are levels. The E-mini is a little bit, usually when the E-mini gets choppy like this. Oh, actually, wait a minute. Yeah, this is old. Okay, sorry, I'm gonna delete this. This is the old contract. So next week I'll make sure I have the new contract up. But yeah, so let me unflag this. Okay, cool. Check, that's the bottom. All right, bet. So okay, so yeah, so ideally I want to see, price respect, see how price reacts to this level. Ideally I want to see this disregarded, but I will not be actively trading inside of the zone. Like I will be flat. So I just want to see how price reacts. If we don't respect this, then I'll probably be looking for an opportunity to take this long and hit this high. And if we do respect, then obviously I'll be flat until we take out this low. But the play that I'll be looking for is a continuation to this area. So yeah, so I'll stay on for any questions that anybody has. I think I covered everything. Boom, boom, boom. Chris says, understand ICT. So again, I take a combination. My personal trading style is a combination of like smart money concepts, some other stuff that I pulled along the way, like traditional technical analysis, and just a lot of stuff that I pulled together over the last 10 years. So yeah, so hopefully this makes a lot of sense to everybody. I mean, so far, I've been doing these since like, I don't know, September, October, and been pretty accurate so far. So hopefully everybody is enjoying this and takes an advantage. And so if you guys are enjoying this and you have, please, don't forget to like the video. We need more exposure. I'd love to get this to more people. So if you guys are enjoying this and you want to see more of these breakdowns, like the video, come back after the video is done being live and like it, put some comments under the section. Just kind of helps Cam know that, hey, this is being, pretty valuable to people. So yeah, so if you guys have any questions, again, feel free to hit me in the chat. Hit me in the chat on the Telegram. So again, shameless plug, free Telegram, but I do a lot of my analysis for Forex in that chat as well. Just did the Forex analysis for last week, like on Monday or Tuesday, like after the holidays. So we're back in full swing. The markets are kind of back to where we would want to see them. Everybody's off of vacation. Chris says this looks like an impulse wave. So I don't necessarily trade off of the logic of impulse waves, but I have never really studied that stuff. But yeah, there's a lot of technical analysis I just don't really like believe in or follow, because like I don't really just trade patterns for pattern's sake. I guess there's context behind it. So yeah. So anyway, so yeah, guys, check out that Telegram link if you guys want more updated analysis throughout the week. Again, doesn't cost you anything. I do have students that I do technically personally mentor. There's like 10 or 12 of them for the past year. It's not a really big thing. It takes a lot. It's very extensive. I pour into people very like a lot, so I don't take on a lot of people. But that main chat that I threw in there is just updated analysis. You'll see kind of like what's going on throughout the week. Some of my journey. I started trading a couple of phase 2 200K challenge accounts with the funded trader. Every week I'm trying to post updated analysis on or updated stats on that so you guys can see like what real trading looks like. I just feel like there's a lot of people in this industry that aren't real traders, and so I want to kind of offer a glimpse into like more realistic trading on a weekly basis. So I basically will update stats. It comes straight from my TradeZilla, so I can't fake it. It's the live stats from the account. But yeah, so looking to pass 2 of those and get 400,000 in funding with a prop firm. So hopefully you guys enjoy this, and yeah, go ahead and end it here, and have a good rest of the weekend.